Here we are going to discuss about chapter 5, that is nothing but analytical framework for investment in share. Now through this heading you will get the idea. Analytical means you have to use your analytical skill and you have to prepare framework and you have to take decision for making investment in shares. So here what type of the model you will use? So after studying this chapter you will get the idea how we can do analytical framework, on what basis we should take decision. So first point that deals with fundamental analysis. It covers about economic analysis, industry analysis, company analysis, and second part deals with technical analysis. It contains different charting techniques, technical indicators, trends, indices, moving averages applied in technical analysis, and lastly we are going to differentiate between technical analysis and fundamental analysis. Now let us see first one by one point. Now here what is meant by fundamental analysis? Now you are aware about that fundamental means here judgment you have to take into consideration, and on that basis we have to go for discussion. Similar way we are using funda, that means what actually we are considering the situation in different point of view. Now here we can say when you go for understanding investment management, that is here first of all we are taking into consideration we have to analyze the risk and return. That means here this is the first step of investment decision. That means what actually security analysis is the first step of the investment decision. So it is an approach which is useful for us to determine what to be price, that is intrinsic value or true value. So what is the objective here? We have to check whether underprice or overprice. So here we can able to also understand fundamental analysis. It believes that due to temporary market disequilibrium, the current market price may be at variance with its intrinsic value. Means due to fluctuation in the market price, the value will vary. That means what actually intrinsic value we have to take into consideration and market price. That means due to temporary disequilibrium, whatever the current market price will vary from the intrinsic value we have to take into consideration, but in the long run the market price would get back to its intrinsic value. So it aims to avoid the risk of loss from buying an overpriced stock and selling an underpriced stock. So here we have to use framework on fundamental analysis. That means we have to take into consideration basic premise that the security has an intrinsic value at any given time, and the estimated intrinsic value can be compared with the current market price of the security, and we have to take into consideration basic assumption also that the market price and intrinsic value can differ from time to time, but eventually investors will recognize the discrepancy and act to bring the two values together. So here simple shortcut we can able to say it is nothing but examination of various factors such as earnings of the company, growth rate, and risk exposure that affects the value of the shares of the company. That means we have to take into consideration three analysis: economic, industry, and company analysis. In some books they have given EIC approach, or there will be definitely question will be asked fundamental analysis focuses on. So your answer will be economy, industry, and company analysis, or we can say company, industry, and economy. That means CIE approach. So CIE approach and EIC approach that we can able to focus here. So now here we are going to discuss first, that is economic analysis. Economic analysis means what exactly? It is the analysis of various macroeconomic factors that having significant bearing on the stock market. Means we have to take into consideration different macroeconomic factors. For example, gross domestic product, again savings and investment, again we can take into consideration inflation, again interest rate, budget, tax structure. So now let us see one by one. We know here even GDP level increases, then our economic level we can able to understand. Again if saving will be increases, then that person will become investor. Means here will be chances saving and investment rate will be increases. Again inflation, you are getting idea, interest rate, union budget also, tax structure system, you can able to get idea. So with the help of that we can able to understand economic factors, and with the help of that we can able to analyze economic situation. Now next here we are going to discuss that is here we can able to take, that is nothing but the industry. So here, but before proceeding that, economic forecasting also we are taking into consideration. Forecasting means what actually? We have to predict about the future. Similar way, when you go for thinking about, for example, weather forecasting, again we are taking here into consideration sales forecasting. Similar way, you have to go for economic forecasting. Economic forecasting means what actually? Forecasting the future state of the economy is needed for the decision making. So we can use different methods for analyzing the state of the economy. For example, economic indicator. Economic indicator means it indicate the present status, progress and slowdown of the economy. Again, leading indicator. Now you can take example of that building and construction. You will get the idea. If cement prices increases, then definitely there will be, again we can say, increase in the cost of the construction. Again here we can take leading indicator, that indicates what is going to happen in the economy. And popular leading indicators are we can consider fiscal policy, monetary policy, rainfall and capital investment. Again, coincidental indicator we can consider, that indicates what the economy is, GDP, industrial production, interest rate and so on. So again, lagging indicators we can take, changes occurring in leading any coincidental indicators are reflected in the lagging indicators. So we can take unemployment rate, consumer price index. Again, flow of foreign funds are examples of such indicators. So diffusion index also we can able to take and through that we can also able to make forecasting about the economy. So here it is this consonance index which has been constructed by the National Bureau of the Economic Research in USA. In simple shortcut, with the help of economic indicators, leading indicators, coincidental indicators, lagging indicators, diffusion index, we can able to understand the economic forecasting. Again here we are going to discuss, there are the various factors through that we can able to understand. Already we have seen that is how we can able to understand, that is here key we have to do how economic analysis, so you can able to get idea. So here with the help of that you can able to understand. Now here next part that we have to go for discussion about the industry analysis. Industry analysis means we can able to get idea, it is an umbrella, means here group of companies we can consider. So it is nothing but industry is a group of firms that are engaged in the production of similar goods and services. That means here group of firms, for example Spheri. Under Spheri there are the various departments are working. We can take here Spheri. Similar way here now here Ranbaxy. So this is the pharmaceutical company actually. When you go for pharmaceutical industry, there are the same companies are working under this, that is one umbrella. Here we can say this is nothing but industry. So it is used to analyze the performance of the industries over the years. So with the industry analysis we can able to analyze the performance of the industries over the years. So it can be classified into growth industry, cyclical industry, defensive industry, cyclical growth industry. Now let us see one by one. What is meant by growth industry? Growth industry has high rate of earnings and growth is independent of business cycle. Again, if you go for cyclical, so we can able to get idea, industry business cycle. So growth and profitability of the industry move along with the business cycle. Again, we can take defensive industry. Defensive industry means which defies the business cycle. Again, cyclical growth industry means it is an industry that is cyclical and at the same time growing. So we can able to analyze the different factors. For example, growth of the industry, again nature of the product, government policy, cost structure and profitability, nature of the competition. Already that points are explained with the help of the pharmaceutical case study in our notes. So you please refer that notes for understanding in detail. So now next part is, that is company analysis. So in company analysis, the growth of the company is analyzed by the investor so that the present and future value of the shares can be known. Means we can able to understand what is the growth of the company. So before making any investment decision in company, now you have heard in Financial Express also, Business Standard also, there are the shares are also given about that company. That means whether we should go for making investment in that company or not. If company is working well, then we should go for that. If company is not working well, then why should we go for making investment in that company? So we have to understand. That means it is the framework which is useful for us, whether we should take share of that company or not. So the present and future value of the shares is affected by the different factor. For example, competitive edge of the company, how much market share of the company having, how much growth of that sales are, stability of the sales are how much, then we can able to understand. So for the company analysis, we are using the different tools. For example, financial analysis. Financial analysis means it involves analyzing the financial statements of the company. So financial statement, you can take example balance sheet, profit and loss account. What shows balance sheet? Balance sheet shows the status of the company's financial position at the end of the year. So with the help of that balance sheet, we can able to understand financial analysis. Again, what is meant by profit and loss account? Already you have studied in accounting management. Again, I will tell you, it shows the profit and loss made by the company during a period. So you that will be get displayed in the month of the April. So you can able to get idea academic year which starts from 1st April and ends on 31st March. So on that basis, the statements are prepared, and with the help of that statement, we can able to understand what is the financial position of the company by using the different ratios. So how we can able to make analysis of financial, that is financial analysis we have already discussed. Again here we can use financial statements which is useful for us. For us means investor, in determining the financial position and progress of the company. So there are the simple techniques we can use, or the various simple analysis, that is analysis that are performed to ascertain the financial position of the company are, for example, comparative financial statement. Comparative means what actually? In this we can able to make comparison of the current year balance sheet compared with the similar data from the previous year's balance sheet. Means we have to take into consideration this year and last year balance sheet, and we have to make comparison. So we have to make comparison of the data. Through that we can able to understand whether sales increasing, sales decreasing, we can able to understand. Now next here we can go for whether we are getting profit or loss, that we can able to get ideas. So here we have to take comparative, that is comparison between different financial statements for different year. So again, trend analysis also technique, it is useful for us to make analysis. That means it shows the growth and decline of the sales and profit over the years. Again we can take common size income statement, that shows each item of expense as a percentage of net sales. Again we can able to understand fund flow analysis. Fund flow analysis, what actually it provides, that is sources and application of the funds. Again cash flow analysis, that shows cash inflow outflow of the company during the year. And last we can use the ratio analysis, that is useful for us to understand different ratios, that is nothing but the numerical relationship between the two items. So you can able to get idea. So with the help of that we can able to understand what is the economic analysis, how we can able to go for economic analysis. Again we have discussed what is the here industry analysis. Also we have discussed how we can use the, that is different tools for the making industry analysis. Again we have discussed about the here that is nothing but the company analysis. So here we have taken what is meant by company analysis, what type of the tools we can use for the company analysis. Again we have discussed financial analysis, so how we can able to do financial analysis, what are the statements we can use, or what type of the financial indicator we can use. For example, profitability ratios, leverage ratios, return on earnings analysis also. So non financial parameter also we can able to take. For example, business of a company, top management, product range, diversification, foreign collaboration, availability of cost of inputs, research and development. So governmental regulations, pattern of shareholding and listing. So we can able to get idea. So here are the different obstacles in the way of the analyst. For example, inadequacies of incorrectness of data, future uncertainties, irrational market behavior. So through this chapter, through this bit, we can able to understood the concept of fundamental analysis, understood the concept of industry analysis, learn about the company analysis. So we can able to understand here. So here this is nothing but the, we can able to understand here, this is nothing but fundamental analysis. So you have to remember this is nothing but fundamental analysis.